There's a headline going around right now that a lot of people are reading the wrong way. It's talking about potential interest rate increases from the Bank of Canada and how that could actually push the housing market higher in the short term. Hey everyone, I'm Matt Young.
And I am Michael Stewart Webb.
And we're the Webb and Young group with Remax Hallmark Che Realty, and this is the Real Estate Roundtable.
Most people hear that rates are going up and immediately think that the market is going to slow down. And over the long term, that can be true, but what we're seeing right now is more about people reacting to the news in the short term.
Exactly. So over the last couple of years, buyers have been pretty cautious. A lot of people have been sitting on the sidelines, watching interest rates, watching prices, and just waiting for the right time to make a move.
But the problem with that strategy is it only works if things keep getting better. And right now, with talks of rates potentially going back up, that mindset starts to shift. Instead of waiting, people start thinking maybe now is actually the better time to act.
And that's where urgency comes in, because even a small increase in interest rates has a direct impact on what you can afford. Your monthly payments go up, your buying power drops, and that can change what type of property you're able to get into.
And on top of that, if more buyers start coming to that same realization at the same time, you're not just dealing with higher rates, you're dealing with more competition again. So waiting can actually put you in a more disadvantaged position than you are already in today. And from the seller's perspective, this is where timing becomes really important. It's a bit of a window right now where buyers are still active, but inventory hasn't fully rebuilt.
But if we start seeing more sellers hold off and then all come to the market at the same time later on, that's when things can shift pretty quickly. So more listings means more competition between sellers, and that can actually put downward pressure on pricing. So the real risk right now isn't where interest rates go, it's how the market reacts as a whole. If interest rates increase and inventory increases at the same time, that's when things can become more challenging, especially on the selling side.
And that's why timing matters so very much. Being even a few months early in a shifting market can make a really big difference in your outcome.
Yeah, so whether you're thinking about buying or selling, this isn't really a wait and see type of market anymore. It's more about understanding where things could be headed and make a decision before the market fully adjusts.
Exactly. You don't need to rush into anything, but you do want to be proactive because once the shift happens, it's usually too late to take advantage of the conditions we're seeing right now.
So if you're even considering making a move this year, it's definitely worth having that conversation sooner than later.
Because small changes in rates or inventory can have a pretty big impact on what your options look like later.
Thanks again for watching the Real Estate Roundtable, everyone. Make sure to subscribe, like, and share.
Thanks for watching. As always, bye for now.
Bye for now, everyone.